So apparently 60% of Airbnb's internal software is now co-authored by AI, and their CEO is actively trying to just, eliminate middle managers entirely.
Yeah, it is founder mode taken to a bizarre extreme.
It really is. Welcome to Earnings Unscripted, where we unpack the actual story behind the filings. Today is May 7th, 2026, and we are looking at Q1 for Airbnb, ticker ABNB. Obviously, the global giant of home rentals and travel, but the numbers this quarter, they are a little contradictory. Revenue came in at $2.68 billion. It is down slightly from the holidays, but still up 18% year over year. But then net income basically evaporated. It dropped 53% down to just $160 million. So, Miro, what is the actual takeaway here?
The underlying demand is pulling forward violently. If you look at gross booking value, they hit $29.2 billion. That is a 43% spike from Q4, mainly because people are just locking down their summer travel early. But the profitability, it's getting squeezed by these unexpected deferred tax hits and massive upfront investments. So the top of the funnel looks phenomenal, but the bottom line realization is getting seriously delayed.
Right. And before we tear into that deferred tax issue, quick reminder that none of this is financial advice. We are just two friends arguing over corporate balance sheets. Okay, so EPS landed at 26 cents and adjusted EBITDA dropped to $519 million. So that leaves roughly a 19% margin. I think that completely explains the immediate market reaction because the tape on this was, well, incredibly chaotic.
Schizophrenic is probably a better word. The stock spent the whole first quarter trending downward, basically fading from the low 140s all the way down to close the quarter around 123. Then the print drops. In extended trading, the price spikes straight up to 143 right before the earnings call, and then it just bleeds out completely while management is talking. It ended up settling basically flat, down less than 1% from the regular close. Investors literally do not know how to value this transition.
Well, they posted 156.2 million nights and seats booked, which is a huge sequential jump, up about 28%. And management heavily pushed this new Reserve Now, Pay Later feature, which instantly ate up almost a full
20%. It grabbed a full fifth of all their global booking volume just like that.
Exactly, which is that's a massive behavioral shift for everyday travelers.
Sure, but that shift completely breaks their historic cash flow cycle. They essentially gave everyone a massive installment plan. So yes, top-line volume explodes, but the unearned fee schedule is now structurally entirely different. Free cash flow looked completely wild this quarter, hitting $1.7 billion. But they are just hoarding deposits super early. It's going to hit Q3 completely differently than analysts are modeling right now.
Okay, yes, that cash timeline shift is incredibly important. We also absolutely need to get into the fact that they're now using boutique hotels as a Trojan horse for customer acquisition. All right, let's get into the details.
That hotel strategy is actually a textbook pivot. Look, when they first started pushing hotel inventory, a lot of the purists were saying, oh, they're abandoning the core mission. They're just becoming another Booking.com.
Right. Diluting the quirky treehouse vibe for generic rooms.
Exactly. But it is not a destination for them. It is a funnel. CFO Ellie Mertz said something really revealing on the call. Her exact words were, over 55% of people who book a hotel on the platform come back to book a home. So we are already seeing that onboarding ramp.
The onboarding ramp. I love the corporate speak for basically, we hooked them. But wait, so you're saying they're using normal, boring hotel rooms to pull in the skeptics?
Pretty much. I mean, think about it. You have a huge segment of older travelers or business people who they just do not want to deal with a random host and a weird checkout chore list. They want a front desk. But once Airbnb gets them to book that boutique hotel, they capture the credit card. They get the app installed on the phone.
Yeah.
And the next time that person opens the app for a family trip, maybe they finally try a private home.
That makes complete sense because honestly, the hardest part of consumer tech is just getting someone to trust you with their vacation in the first place. Once you break that friction, that's an incredibly cheap customer acquisition hack.
It is. It's an elegant system. And speaking of cost hacks, that brings us right back to that AI point you opened the show with, the whole founder mode engineering shift.
Right. The fact that AI is authoring 60% of their code now, which is just, honestly, it's wild to think about from a job security standpoint.
Oh, it is completely wild. But honestly, the more impactful AI metric is happening way down at the bottom of the funnel. Not in coding, but in customer support. They actually dropped their customer support cost per booking by roughly 10% year over year.
Wow. Okay, let me guess, just by throwing chatbots at angry guests.
Yeah.
Because usually that is a fast track to ruining your brand loyalty.
Well, yes, but they're doing it differently. Look at Expedia or the competitors. They built these flashy AI features at the top of the funnel. Like, hey, chatbot, where should I take my kids in Italy?
Right, which nobody actually uses.
Right, but Airbnb built AI deep into the plumbing for trust and safety adjudication. It is reading hundreds of dense cancellation policies and making instant rulings on disputes, and doing it really well.
Okay. Doing the actual emotional labor.
Exactly. Chesky noted this specifically. He said, when guests contact us through our AI assistant, over 40% of issues are now resolved without a human agent, up from about a third in Q4. So that is pure operational leverage. When summer travel spikes, they do not need to hire proportional call center staff. The bot just scales.
Okay, so that ties right back into Brian Chesky's war on middle management, doesn't it? Because if you have AI handling guest disputes and AI writing over half your software, you suddenly do not need those, what was the phrase, the 30,000-foot hands-off managers?
You do not. You flattened the entire org chart. You phase them out. And that is exactly why they're projecting such strong margins. They are proving that growth does not require building this massive hierarchical pyramid.
It's like they're stripping out the entire bureaucracy layer just to feed the core machine, which is brilliant, but it does raise a pretty big question. If they're generating all this operational cash and saving all this money, where exactly is it going? Are they just going to sit on it heading into the rest of the year?
They are absolutely not sitting on it. In fact, Ellie Mertz, the CFO, was very clear that because they are seeing this top-line upside, they are plowing those dollars directly back into localized international marketing and even more generative AI expansion.
So basically growth over profit padding, which makes sense if you're playing the long game. Did they give a hard number for next quarter?
Yeah, for Q2, they are guiding for revenue between 3.54 and 3.6 billion. That is roughly a 14 to 16% bump year over year. And they actually raised the full year outlook too. They expect adjusted EBITDA to stay at least at 35%.
Okay, so the guidance is honestly pretty aggressive. Although you have to wonder about the back half of 2026. I mean, they are going to lap the original launch of that Reserve Now, Pay Later feature. They're going to lose that massive artificial baseline boost.
Exactly. Mathematically, the comps get significantly harder, and there is real-world friction creeping in. They pointed out that March bookings noticeably decelerated across Europe and Asia. They actually called out the conflict in the Middle East as creating about 100 basis point headwind on overall booking growth. So that geopolitical drag is, it's a real variable heading into the summer.
It is a lot to navigate, especially while completely reorganizing how your company builds products. But honestly, what struck me the most was Chesky's ambition here. He had this quote on the call where he said, "We imagine offering just about everything a traveler needs."
Whew,
Right. The everything store of travel. The problem with trying to offer everything is that it's incredibly expensive to maintain. You risk losing the exact lean operational leverage we just praised them for.
Yeah, the classic super app trap. Still, I have to give them credit where it's due. Getting a 60% code output from AI and legitimately lowering support costs is an incredibly strong position to be in right now. We'll see if the grand vision actually holds up when those tougher comparisons hit.
If the math starts slipping, we'll find it.
We always do. Thanks for tuning in and dissecting the quarter with us.
Catch you next time.
Just a quick reminder before the mics cut out, if you want these earnings drops to just show up automatically, feel free to follow the show. Also, as a small transparency note, this podcast is actually generated using AI to see if technology can take massive SEC filings and turn them into a natural chat between friends. We genuinely want to hear your feedback or any ticker requests, so just email us at earningsunscripted@datamadness.ca or grab the X link in the show notes.
Talk to you soon.